Hello, and welcome to the Abundant YouTube channel, where we talk about a wide range of business topics related to creating and running outperforming companies. I'm Carl Meyer, your host. Today, I will be telling you about the story of Mark and Mary and the challenges they had when their company ran into cash flow problems. So let's get started. Mark and Mary provided services and products for the upstream oil and gas market. They'd been in business for 20 years. They understand the business is very cyclical and that things can change very quickly. They've been through some of the highs and lows, and during the good times, they made a lot of money and were able to save some of it personally, so that was fantastic. During one of those up times, they saw an opportunity to invest in a new product and an opportunity there to make some good money. However, they invested a little bit more than they should have, and then there was a shock to the market, downturn, not a good timing situation. So they did not have a chance to make their money back on this investment. So they've got a little problem. Little overinvestment, so now they've got to late pay their vendors. Next thing you know, their controller's warning them, hey, we've got a cash flow problem, things aren't good. Yeah, but Mark and Mary are kind of like, yeah, hey, it's just a little downturn, no big deal, we've been through this before. And, vendors are putting them on credit hold, COD. The controller's getting really frustrated, finally just quits. So got all these things, flashing red warning signs, right? What do Mark and Mary see? It's not that bad. That eternal optimism of the entrepreneurs coming through. And that's all good until. So this brings up a question that what is the longest river in the world? Well, it's not the Amazon, it's denial. Ha ha ha, little joke there. So the Nile River is the longest river in the world, but when you kind of run the and Nile together, you get denial. And denial is somehow your mind tells you that a big problem is not really a problem. And this is very common. I've done number of turnarounds, had my turnaround certification. I know other people that have done turnarounds, and this time and time again is what we see. Until there's some big event that really shocks people and gets their attention. In some cases, it's when an owner has to personally write a check to the company to keep it in business. Maybe it's the IRS seizes a bank account, bank calls a loan. For Mark and Mary, it's when their vendors, after their controller quit, Mary took over the controller function and started telling the vendors, oh, we'll pay you next week, we'll pay you in 2 weeks, we'll pay you in 3 weeks, And then the days come and go where she had made those promises, and the vendors are coming back 10 days after the promise date and saying, okay, you told us you were going to pay on X date. We haven't seen the money. What's the deal? That is the point where Mary really got hit emotionally. It was personal. It was real for her. She had hit rock bottom. And that's when she reached out to me. So the first thing is, how do we avoid and then deal with the situation? Well, the first thing is listen to your advisors. Your CFO, your controller, your CPA starts telling you run out of cash. Keep an ear out, listen to them. You should have attorneys, bankers, other advisors, maybe a board of advisors, advisory board. And if you get into the situation where you need it, turnaround professionals. So how do they tell you, how can they share with you what the problem really is, the magnitude of the problem, and how do you know before you get there? Okay, we're out of cash. Well, that's a little late. I'd like to know several weeks in advance. Can that be done? Yes. There's a very common tool. It's the 12-week cash flow projection. It's a 12-week forecast looking into the future. Now, this involves numbers, but it's not accounting. When an accountant, your controller, your CPA makes entries, they do all their magic with the accounting, that's very rule-based. When we get proof of shipment, we can invoice. When we collect money, we see it in the bank, we can mark that off the accounts receivable. So accounting is very rules-based. Very, yes, there's assumptions in there, and I understand that, but a forecast is all about the assumptions. I have done literally hundreds of forecasts, and even cash flow forecasts. I've done hundreds and hundreds of these. So it's all about the assumptions. Yep, we start with whatever cash we've got right now. We know what our receivables, payables are. But basically after that, it's what is the future going to hold? When are those customers going to pay us? Well, this one will pay us then. That one might pay us later. What about that invoice? When are we going to pay our vendors? Well, and when's payroll? How many people are we going to have? What are we going to do over? Can we shut this down? Cut that cost? All those forecasts are critical. Work with your CFO or your turnaround professional on the assumptions so that you can get an accurate forecast and you can look into the future and know what you need to do. And then you can change your assumptions, change your, thus change the forecast, reach a better solution and get the answer you need and avoid this problem. But if you identify, you've got a cash flow shortfall and, you're in a cash crunch, you need to deal with it. What do we do? Well, I've seen companies that didn't have any sales for years. I've seen the startup type situations mostly. Seen companies that have lost money repeatedly year after year, and they both survived. But I've never seen a company that just ran out of cash and had any kind of payments due that survived. Cash flow is what we're talking about. And so for the vast majority of companies, you collect your money from your customers well after you make payments to your vendors, to your employees, to your overhead. This is, when you get in that cash flow crunch, this is even more true because once you've hit your credit limit, you're on COD, now, boom, you have no terms, you're paying at the time you need that material. So in this situation, shrinking your sales actually brings you more cash because as you shrink, you collect those receivables from the larger previous sales, and then you can use that to pay those past dues and start to get caught up. At the same time, of course, you're going to be shrinking your overhead, cutting your overhead down as far as you possibly can. If you do those things, shrink your sales, watch your overhead, you can usually get through these kind of cash flow crunches if you're not too far along. But in some cases, you are too far along, and that can happen for a variety of reasons. If you've waited to a certain point, bankruptcy is a tool. Now, every small business owner that I've ever met tries to avoid bankruptcy at all costs, and I understand that. Bankruptcy is not a fun thing, it's expensive, and it's not a pleasurable experience, both emotionally or the actual technical act of going through it. But there's two kinds of corporate bankruptcy in the US, Chapter 7 liquidation and Chapter 11 reorganization. And they're both expensive. Chapter 7 liquidation can cost at least $50,000. Chapter 11 reorganization can cost at least $250,000. And I mean, $250,000 if you're already cash constrained is very difficult to do. So most small to lower middle market companies, Chapter 11 is a very unlikely scenario. For Mark and Mary, they actually did get so far along before they recognized the problem, before they started to do anything about it, that they did file for a Chapter 7 bankruptcy liquidation. and they shut down that one company. Fortunately, they had a little money saved up that they were able to use to start another company in the same business and reestablish themselves and build up and make some money. Eventually, they were able to save up and use some of the money they'd earned from their new company to pay back some of those debts that they felt obliged to, even though they were no longer legally responsible for, pay back some of those vendors and people that they owed money to. So that, in the end, there was some silver lining to the story, but still a tough situation for them. I hope you've enjoyed this video. If you have any questions, comments, suggestions, or concerns, please share them in the comments section below. Also, remember to click the subscribe button to see more abundant videos so you can keep outperforming your competition.